Hey everyone, welcome to Managerial Accounting, Chapter 16, our very first chapter. But before we jump into the actual chapter, I just want to kind of hit some high points of the class. Um, so you'll be having weekly homework in Cengage, just like you guys did with financial. And so, kind of what my intent was were all of your homework problems that are assigned in Cengage. I'm going to work those through in videos, and so hopefully uh, it'll be beneficial and make the homework a little bit easier. My the intent of the homework is certainly not to be hard, or unsolvable. So hopefully this takes a little bit of the mystery out of it. So the class is going to be set up weekly homework. You'll have a weekly quiz. Should be a pretty easy quiz over the reading. And so then there'll also be two exams. So for studying this class, what I'd recommend is if you guys sit down, read the chapter through. They're pretty short chapters. Go through the PowerPoints are posted in Canvas, so you can go through, pull those up, just skim through the PowerPoints. They do a really nice job of kind of hitting the high points. And then if you sit down and watch these videos, and I've also posted a blank Excel sheet that you guys can kind of work along with me. And so that'll provide you a really good notes for when you guys sit actually down with Cengage and actually work through the homework. So anyway, with that, let's kind of jump into managerial accounting. And so the one thing with managerial accounting in the how it's different from financial accounting. So financial accounting, it's governed by GAAP. GAAP is going to set all the rules for how you do anything, and the intent of financial accounting is really geared towards external reporting. So, while companies use their own financial statements, they definitely need a lot more in information, and that's kind of what managerial accounting is. So where financials is geared towards outside parties, managerial accounting is geared towards the internal users, so the managers and everyone. And so, and what the kind of the main focus of it is, where it really narrows down on is understanding cost. So, what's really important to managers and decision makers within a business is understanding the cost of a product, what goes into it, and so that's gonna be really important. And that's what the major focus is of managerial accounting. So I've pulled up this little worksheet here, and so just kind of a really high level overview. Hey, this is just a simple trial balance. This is kind of a really basic chart of accounts. We have cash, receivables, inventory, fixed assets. Those are all of our assets. We have our liabilities, accounts payable, debt, items like that. Then we go down to our equity, which is stock, retained earnings. Then a little bit further down, we have our sales and our income, and then below that we have our expenses. And so that's how the accounts are lined out. This is exactly what you've seen in financial accounting. And then how these accounts roll up. So all of these accounts here, your assets, your liabilities, roll into your balance sheet, and then your income and expenses roll up into your income statement. Then at the end of the year, we take our income statement and we close it out to retained earnings. And so we're not going to use as many accounts as you guys did in financial. What we're primarily going to focus on a lot is going to be this inventory account. So it's inventory, and then cost of goods sold down here is what we're going to do a lot with. And so inventory is actually going to have, it's not just going to be one account, it's going to be several accounts. So we're going to have the basic accounts we're going to work with is we're going to have materials inventory. And so materials inventory is, hey, if we're making something, say we make guitars, and so when you're buying the wood and all the parts that go into it, those are first going to go into materials inventory. Then there's also going to be an account called factory overhead, and as we get into a little bit later, it's actually going to be 2 accounts. But the idea of factory overhead is that's going to be things that are going to be related to what we're building, related to what we're making, but they're not either directly related to it or it's really insignificant cost. So for guitars, that could be maybe the strings on the guitar, or maybe little tiny nuts and bolts or glue, and so that kind of stuff is not going to be as substantial as like the wood for the guitar, but it's still going to be part of the guitar. We also have an account called work in process, and so that's going to be, hey, we've taken this wood out of our inventory and we've started building the guitar, but we're not quite done with it yet. And so that is, we're going to take this stuff, and move it into work in process. Then we have finished goods inventory. And so that's going to be, hey, once we go ahead and we build these guitars, it's ready to be sold, we haven't quite sold it yet. And so that is going to be our finished goods inventory. So just wanted a quick, I'm a very visual person, so it's nice to have a little picture on how things kind of roll up and stuff. So that's just kind of a real high level kind of look at a chart of accounts.